IonQ has surged by nearly 10%, fueled by record-breaking quarterly revenues, a massive $1 billion capital raise, and an impressive expansion of global quantum partnerships, raising an important question. Has the investment outlook for this quantum computing pioneer fundamentally shifted? In the second quarter of 2025, IonQ reported an unprecedented $20.69 million in revenues, marking the highest quarterly total in its history. This extraordinary performance came alongside the completion of several strategic acquisitions, a hefty $1 billion equity raise, and announcements of new alliances with key players in the United States, Japan, and South Korea. These partnerships aim to accelerate IonQ's cutting-edge quantum computing and networking advancements, signaling the company's ambition to lead in the emerging quantum technology landscape. But here's where it gets even more intriguing. During this period, IonQ not only boosted its technology capabilities, but also strengthened its leadership team by bringing in seasoned industry experts. The company is actively collaborating on groundbreaking quantum solutions focused on optimizing energy grids, working with prominent institutions such as Oak Ridge National Laboratory and the U.S. Department of Energy. These partnerships emphasize IonQ's commitment to applying quantum technology to real-world, impactful challenges. So what does this mean for investors? IonQ's massive influx of capital and expanded global presence offer robust immediate growth drivers. With a significantly larger war chest, IonQ can ramp up research and development while pursuing strategic acquisitions. However, the story isn't all smooth sailing. Despite the top-line growth, IonQ's losses have deepened, and ongoing share dilution remains a concern that could affect future profitability and shareholder value. In addition, changes at the board level, including the appointment of a new chairman and other key executives, could shift the company's strategic direction and risk management approach. Investors need to weigh these dynamics carefully. While IonQ's growth story has gained momentum, the clarity around sustainable profitability and disciplined financial management is still unfolding. And this is the part most people miss. Could IonQ's persistent losses and shareholder dilution become an even bigger hurdle than many anticipate? According to recent valuation assessments, there is a possibility that the stock is trading above what fundamentals would suggest, adding another layer of complexity to the investment decision. Diving deeper, IonQ attracts a broad spectrum of opinions among analysts and investors alike. Currently, 53 different fair value estimates exist, ranging dramatically from as low as 50 cents to nearly $50 per share. This wide range highlights the polarized views on IonQ's future. While some are bullish on the company's technological breakthroughs and long-term potential, others remain skeptical, focusing on near-term cash burn rates and execution risks. As you consider these diverse perspectives, think about how such contrasting outlooks might influence IonQ's journey ahead. Feeling skeptical? Or maybe you have a bullish stance. You're encouraged to craft your own investment story around IonQ in just a few minutes because exceptional investment returns rarely come from merely following the crowd. If you're starting your research, it's useful to examine one major potential reward and 4 critical warning signs in IonQ's profile. This balanced approach can help clarify your investment thesis. Our free, comprehensive IonQ research report even condenses fundamental financial data into intuitive visual formats, making it easier to grasp the company's overall health at a glance. Curious about what other innovative tech investments might offer? Early adopters are eyeing emerging opportunities in AI, rare earth metals, and other sectors ripe with potential. For example, some early-stage AI stocks stand out as possible game changers that could outperform traditional tech giants. Other companies have proven resilient through significant geopolitical and economic challenges, such as tariffs and the pandemic, which might offer useful lessons for portfolio diversification. Please note, this analysis is purely informational and draws from historical data and forecasts without bias. It does not constitute financial advice or a buy-sell recommendation and does not consider individual financial situations or goals. Market conditions and new information can rapidly change a stock's outlook. Finally, for investors who want to stay ahead of the curve, tools like AI-powered stock screeners can analyze thousands of data points daily, uncovering undervalued gems, high-growth innovators, and dividend leaders, all tailored to your own investment criteria. So, what's your take on IonQ's prospects? Is its bold quantum vision worth the risks of ongoing losses and dilution? Or do you believe the company's rapid growth and strategic moves justify a premium valuation? We'd love to hear your thoughts. Do you see IonQ as a quantum leap forward or a cautionary tale? Share your perspective and join the conversation.